Hello, my name is Anat Admati. I'm a professor of finance and economics here at Stanford Graduate School of Business and the faculty director of the Corporations and Society Initiative, CASI. And today I welcome here to our occasional webinar, Fahmi Quadir. Our webinar is called Power to Truth, because that's what we're trying to do here. And who better than Fahmi Quadir to discuss Power to Truth, because that's sort of what she does. So let me just say a few words about Fahmi Quadir. She is renowned for her fearless short-selling activities, meaning she bets against companies and specifically against fraudulent companies, and is sort of a market maverick. She is able to articulate why it is that she does what she does and engage with the policymakers and market participants at all levels. And she's a great friend and collaborator who's visited here multiple times and but hasn't been here in 4 years since COVID and everything. She relocated to London. So we're really thrilled to have her with us in person today. And in terms of her biography, she studied math and biology for an undergrad at Harvey Mudd College, and somehow coincidentally happened to fall upon the activity of short sellers in capital markets, which in financial markets, who first sell high and hope to buy low later on, betting that the stock price will go down. She started this career at Cran Savage. It's a hedge fund, asset management. And then she broke off and in 2017 started her own Safcat capital short-only hedge fund. So Fahmi is renowned. She was in a Netflix series as a drug short when she shorted Valiant, and there's been some events recently. But I want to start, so I let her speak a little bit here by taking us from the CASI and Power to Truth to where do you see power to truth in what you do in the financial market? How do you fit in to power to truth?
Great. Well, thank you, Anat. And it's nice to be sitting here in conversation with you, capping off a day of activities here at GSB. So as a short seller, I feel that my activity is a necessary part of price discovery in capital markets. There are various lines of defense that market participants have in protecting themselves against fraud. That first line of defense is usually a company's own internal auditing team. But you can imagine that those auditors internally within a company, though they may see fraud, it's very difficult for them to come forward and actually claim fraud against the company, right? Whistleblowers face incredible amounts of risk and potential for career-ending litigation. So it's very difficult. There's very little reward other than the moral reward it takes to expose some of this information. And then you have a company's external auditors who are signing off on the company's annual reports. And again, you see oftentimes these auditors have been with the company for many, many years. And who's actually in charge of conducting these audits? They're usually the most junior accountants, even if a partner is signing off. And those accountants are not necessarily seasoned or experienced enough to identify fraud. So they might not be the most effective at protecting the rest of the market from fraud, because they're not looking for that. They are essentially hired by a company to check all the boxes. They are not.
We had a panel with Francine McKenna in a previous episode where we discussed the auditing profession. And then since you're also looking at other frauds, not just shareholder accounting fraud, there is other stuff. There are other stakeholders that could be defrauded.
Exactly. So that leaves us to our next line of defense against fraud. And that's market participants and the media who are positively incentivized to expose the truth. So again, like Anat says, this is not just about accounting fraud or just the financial statements. This could also be consumer fraud. So consumer fraud obviously has a fundamental impact on the business. So journalists, they have reputational claims they can make. They can hit it big if they're able to expose a corporate scandal. And short sellers like myself, we're financially incentivized, of course, to expose this information, whether it's accounting fraud or predatory activity, anything that will result in price discovery. And again, yes, we do make money off of that, but it is ultimately, in order to make that money, we have to be right on the facts that we're presenting.
And then you have to convince the market somehow so that the stock price goes down, market or policymakers. For example, it doesn't have to be precisely fraud, could be, money laundering, other illegal activity that might result in, fines or, business model being destroyed. So then you will benefit, but the world will be a better place.
Exactly.
Since what you're looking for is essentially, at least, could be criminal behavior or at least deception in terms of what we know. So it sort of promotes truth, price discovery, meaning the price reflects true valuations and not some hyped valuation. So you go after the ones that not necessarily are hyped, but just that are just overvalued in markets. That's the essence of the activity of the business model. You are called all kinds. I mean, let's actually start again with some of your famous cases. Some of your favorite shorts or the shorts that really illustrate what you're doing. One of the big ones being Wirecard, a German fintech that you were one of the many short sellers of. Talk a little bit more about how you got involved with Wirecard briefly. Wirecard obviously failed in June 2020, and but your activity, how you got to do it.
Yeah, so one of the ways that we come upon short positions is looking at the history of short selling allegations or critical media against a company over time. And with Wirecard, there was critical media and short sellers coming, presenting information, and also shareholders presenting critical information over, its 2-decade history. Because wherever there's smoke, there's probably fire. And the problem is when, a company is able to evade justice for so long, it cultivates a kind of mentality within management of, we can really get away with everything. Look at us, we're Wirecard.
We're on the DAX 30. This is like the biggest index, which also brings in a lot of institutional investors.
Right. We have journalists, we have shareholders you've claimed we're laundering money, that we are committing fraud, yet the German securities regulator is protecting us. Look at us, we're Wirecard. Right. That was really the line that the company would use because they were so confident in their ability to evade any form of justice. Or repercussions of their activity, their decisions, that they kept making worse and worse decisions. So the thing with most fraudulent business models is that they're doomed to fail. You can't go on committing fraud indefinitely. Something has to give at some point. And in our view, because we saw Wirecard for what it was, which is a global money laundering operation, in order for that business model to fail, it ultimately has to start losing some of the money. Cash has to, once the cash that comes in starts to go down, then you can't show the profits that you've been showing. And it all sort of collapses. So the time we got involved in Wirecard was around 2017. So you have the rise of crypto, digital assets, and a lot of, criminal organizations. They decided, why are we going to try moving money through these old-fashioned mechanisms of using different transactions? Instead, we can move a lot more money with a lot less oversight through, these digital assets. So starting, with the rise of digital assets, Wirecard started losing money. And that was pretty clear from what was, the business decisions that Wirecard was making, because this culminated in them buying a prepaid card business in the United States. And this was a very, it was a ballsy move. Basically, they the company had avoided doing any business in the US because they knew that US regulators are very strict about money laundering. It's not like Europe. So at some point they realized we need to keep something to keep this going, to keep this fraud alive, this operation alive. So they did the one thing they refused to ever do, and that was get a foothold in the US. And that was where we started to dig in, where we saw that we can come in with a different angle as far as our research. So we really focused on the prepaid card business and the money laundering. And this brought us lots of different whistleblowers, various sources, some of which are criminal sources, but it's the criminals who have the best insights into some of this. And over time, like over the 2 years that we were building our thesis, we eventually started presenting our information, our research to the government, and we were official witnesses in a case against not Wirecard named executives, but those who were actually involved in the operational side of the money laundering. And those individuals actually were arrested just about 2 months prior to Wirecard's collapse.
Mm-hmm. So that was pretty amazing. That was already in COVID when that whole thing happened. And all of a sudden there's €2 billion hole in that balance sheet after all these years in which people were suspicious of the company and pointing out things, and the German regulators not doing anything about it. So it was a huge scandal in Germany once it broke. But for so many years, the Germans just didn't want to look, wanted to go after the messengers and not that. So that was one. Now, Valiant is all documented, so let's not visit that, your first one before your current iteration as your own manager. But let's go to the very latest and big one from the perspective of your approach to it, which is AdTalem. So tell us what AdTalem is, and tell us the story of your coming to your short position, as well as for the first time coming out publicly with your report at the stage that you did.
Yeah, so for us, one sector that we like to look at is anything that has a potential for consumer abuse. So throughout the history of our fund, we've been short lots of payday lenders, a lot of the buy now, pay later players, anything that involves sort of like a regulatory gray area where there might be some set of federal laws, but there's also state level laws. And because these are things that other investors might not be taking into consideration. Most investors, they look at the stock price, they look at the financial statements, they aren't considering, what's actually happening with the business and the end customers of the business. We're not talking about Valiant, but it was the same idea with Valiant,
taking advantage of customers.
Exactly. Yeah. So, if your business model depends on taking advantage of your customers, then we believe you're doomed to fail at some point. So for that reason, we've always kept an eye on the for-profit higher education sector, because we already knew, through the history of these schools, century of history, these are schools that routinely blow up because they're very aggressive in how they're recruiting students. They make a lot of deceptive claims to target these students. Oftentimes, they're targeting veterans or active military, single mothers, minorities. And what ultimately happens is they're overcharging these students for very substandard education. Those students very often might not graduate, and they're left with thousands, hundreds of thousands of dollars in debt in some cases.
So it's sort of the whole machine of it is federal money.
Exactly. Taxpayer dollars.
Student loans that are paying for this substandard education where there isn't good enough standard for their product, basically.
Exactly. So so because of this, because of the abuse of public funds, of taxpayer dollars, and because of the scale of the student debt crisis, we knew, now is an important time with where rates are, with where, the fact student debt repayments have now started.
Yeah.
AdTalem Global Education, which is what we have published our research on, is the #1 recipient of federal student loan money of any university system. So,
Wow.
you know, you take
It's a
these,
name people have not heard of.
no,
So, but they have acquired others. So what's
they
the
were
short
formerly
history?
known, yeah, they were formerly known as DeVry, which I'm sure many of us have seen the advertisements over the years. But the thing is, a few years ago, the FTC went after DeVry and said, you are deceiving students, you are committing fraud. So, you know, we are gonna
Change name. Let's change the
exactly.
name.
So they changed the
An
name.
innovation in finance usually.
They changed the name, and then private equity bought DeVry for $1.
Uh-huh.
And in exchange, AdTalem has been paying private equity, you know, to the tune of millions of dollars for that privilege of owning DeVry. And part of that deal actually included $340 million in indemnification to the new owners of DeVry.
Wow.
And these are all things that are off balance sheet. So ordinary investors, if you're reading the financial statements and you don't know the history of the company, you don't really know that this is happening. And a big part of that is because of the ownership base here. Traditional investors like me, you know, hedge funds, are not actively investing in for-profit operators because they know the business cycle. They know that these are often doomed to failure. There's a lot of regulatory risk. So what you have left is, you know, this is a company, AdTalem is traded for over 30 years publicly. So it's in a lot of indices, and it has been for a very long time. So you have a shareholder base that's largely, you know, passive management or just long only asset managers who own thousands of other securities and who aren't necessarily paying attention to these issues.
Just part of a huge portfolio, and
exactly.
Yeah, people own some shares. Yeah.
So there's a just black hole as far as information. The average person does not know what's going on at this company. The average investor
Nobody
doesn't
cares
know.
enough. Nobody has enough
Exactly.
shares, enough interest in doing this.
Exactly. And yeah, the company is only 3 billion as far as its enterprise value. This is smaller by far than any of the companies that we've ever spoken out about. But the fact is, it's taking over $2 billion a year of taxpayer money. So the implications societally and the risk that we all bear as far as the business itself
And
is
especially
very
the
high.
Students.
Especially the students
and the medical students.
And these poor outcomes.
Yeah.
So because there is this vacuum and this desire for information within the market, we decided to take a departure from our traditional business model of kind of working behind the scenes to put ourselves front and center and to tell the story of why we believe that the risks within AdTalem are not priced accurately in today's share price.
So it's uninvestable. Exactly. You call it uninvestable. And you're saying this to people who are investing in it, and they have to take notice of the fact that here is somebody who actually looked in the company, who uncovered truth, and who's telling them that they're investing in an uninvestable company. So now they kind of, you know, have to wake up to it.
Exactly. Yeah. So the immediate reaction, you know, the first bit of like all the inflows of emails was actually from a lot of these shareholders who don't know these issues, and they want to engage with us. They want to better understand how we're making our assumptions. How do they think about valuation? And that, you know, I think that's a
service.
Yeah, it's a service. We've and that they view it that way as well. And that's
you've done the work.
Exactly.
You're going to make money on it because you were the only one selling short this company. Here they're pumping their own price by buying back shares and all of that. So you felt the price was good for short.
Exactly. It was trading nearly at all-time highs. Despite all of the risks that we were analyzing. And that is largely because they bought back over $1 billion in stock since they got rid of DeVry, since the name change.
So they were just creating this illusion that they are okay, having all these passive investors invest in them. And then comes Fahmi Quadir and I've got
their nightmare.
And exactly. And suddenly somebody's shining a light on this truth, on this reality of this company, including the fact that people are putting their money into this company so it can keep going and it can keep buying its own shares, and that all of it lives on student loans by students who won't get their degree and won't be able to practice medicine or whatever.
Exactly. And I find that, you know, even though it's still early days, the amount of media interest we've had in the story I find is greater than if we had come out publicly with research on Wirecard or even Valiant.
Yeah,
And that's because this is a story everyone understands and it affects all of us.
and you had conversations with the students themselves. So tell us about the medical school.
So the medical school, and you can find this on the Department of Education's website, has an on-time graduation rate of under 16%. And this is really unacceptable because as we've conducted interviews with medical students there, we're finding that almost 50% of students are not even allowed to take their licensing exams, or at some point they're
So they put
forced
all
out of
this
the
money
school.
in.
Yeah, and at the point at which they're kicked out or they fail out, they've already taken $300,000 of government
So it's
subsidized
basically
loans.
designed to fail, like over lending or
Yeah.
payday loans that are clearly not going to be paid, except they're going to
Exactly.
get renewed with more and more fees. So they're kind of never
Exactly.
paid, but
Yeah,
meanwhile,
there's no minimum GPA
right.
requirements, no minimum MCAT requirements. So you're preying on this
Yeah.
dream that students have of becoming a doctor, but you're not really adequately assessing, are these students capable of going through the rigors of medical school? And you're knowingly doing
And then you
that.
kick them out
And then you're kicking them out.
when they obviously can't do it.
Exactly. And once
Yeah,
you've
so it's
already
just
taken hundreds of thousands from them.
it's just a business model that's just designed to
Yeah.
harm these people and
Yeah.
exploit their
And they have these
desires.
graduate programs that are, within the US, doctoral programs. Usually most PhD students, I'm sure at Stanford as well, you get grants.
Yeah.
And you can TA, but we have students who've been in doctoral programs who have paid, over $500,000 and still don't get their PhD.
It's unconscionable. It really,
Yeah,
it really is
it's
unconscionable. And it's amazing how that can happen
Yeah.
when the customer, the student in this case, doesn't really understand what they're getting into.
No.
And
somehow no one just, says that this is not unacceptable.
not okay, yeah. Because then, we were talking today and the class was included the word narrative, because they always say, and they say this about payday loaning, oh, we need,
Yeah.
facilitate the credit market.
Exactly.
Or here we need to give these people a chance at education.
Yes.
And so when they go to lobby against any kind of rules on for-profit colleges, they start talking about all the opportunities.
Yeah, these are minorities who otherwise wouldn't have a chance at higher education.
So that's a story they tell.
Meanwhile, the company, the CEO of the company, the current CEO, at the last Investor Day said he wouldn't send his children to these schools.
Right. So here he is in his own words saying something about the quality of education
Yeah.
that he's providing. And so here you came in, and this is really the power, because, I reflected on it when I saw that story just in the last few days. Fahmi can actually get it in the news in a way that, an academic research couldn't necessarily, because it hit the stock price.
Yeah.
And so that's the power you have.
Yeah.
That when you happen upon a story like that not that as many people have.
Exactly. And we were looking through some of the data after the report. The highest concentration of interest was actually from DC, which is incredible, right? DC is the one that can actually do something about this.
Exactly. So you can know that if people from the public actually get interested in a story like that. I mean, this is my challenge, because I'm interested in banking, because they can create so many confusions about banking, and they control so much money that they can get so easily that it's very hard to come up against the banking sector. But in an education sector where you have actual customers who cannot practice, or who paid all this money and didn't get anything for it, people can connect with that.
Exactly.
And then if people can connect, then policymakers kind of have to respond. So it really is amazing how, a shrewd assassin, that's her nickname in some circles, short seller, can actually make the world a better place like that. It's quite fascinating. And that's why we love Fahmi so much at CASI. Because she's short selling for justice.
Yeah, it's really what gets me up in the day. It's not, counting the dollars, because most of the time short sellers are losing money. Let's remember that.
Very tough business.
It's a very tough business. So
you're talking the guts here. I mean, when she had to wrap up the class and somebody asked her about her risk appetite, she said, well, I have more of it than any of you in this room. And that was quite the summary, because it's, you can lose infinity I mean, you'll get completely killed in these markets if one of your stocks just hits the roof.
Right. Or gets bought out.
Or gets bought out, and then no matter how bad they are, they get swallowed, and there's no profits to be had.
Exactly. So you really need to find some motivation beyond just the money that's there to be made.
Yeah, it's kind of crazy, money. The market usually moves up, and natural, especially when interest rates are low. And so during those years that you've been doing it, conditions were not favorable.
No, they're never favorable.
They're never favorable, she says. Yes, they're never favorable to short sellers. And so I think you gave us a glimpse into what you do and why it matters and how it can help, and how you are helping give truth more power. Thank you, Fahmi, so much.
Thank you for giving me the chance to talk about all of it.
Yeah, thank you. Thank you.